to explain the fact that a lot of traders are always coming into contact and always asking why is a lot of people always losing money in trading? Why a lot of people or few number of people only making profits? And so that's the main reason why I'm doing this. So today be talking about why actually do most successful traders why they succeed and how they succeed. What is it they're doing that the rest are not doing? I'm sure a lot of people already have the idea that if you must be successful in trading, you must first have what is called the strategy. The second one, your emotional psychology must be on check, and of course, your what's it called, your risk management and money management all must be a check. But the truth is, not knowing this alone that actually make you successful. So, do you practice this? How much time do you actually put in place to make sure that this we should know actually come in place? And that's what we'll be talking about today. So, the major secret, listen, the major secret of becoming successful trading is first for you to work on yourself because you're not successful in trading. It's not because the market is against you. It's not because you don't have the right strategy. It's not because you don't know what to do. It's not because you're not experienced enough. It's possible that you might be experienced far more than even some of the successful traders. So they are not successful because they want to be successful or because they have something which you don't have. Most times, you even have access to more sophisticated equipment than they don't even have. But yet, it seems as if they are more successful than yourself. So now, what is this? Now, listen to this. Before we start, if this is your first time watching this program, it is your first time coming to my channel, please and please do me a favor by clicking on the subscribe bell icon down there. And of course, the bell icon is beside it. Make sure you click on it to get notified whenever we post another video, whenever we go live again. And please do it to share this video with your friends, your family, and your loved ones. That's it. Now let's begin. Okay, as I was talking about, I said it's not because of the strategy, but now the problem is how do you manage the money in your account? I repeat, how do you manage the money in your account? After placing your trade, what is your take profit? What's your stop loss? What is your risk reward ratio? And do you even have a place where you record all this trade? So you can go back after 1 week, after 2 weeks, or after a month, after a year to go and check, okay, how profitable am I or what and what have I lost in trading? Because that's what we do. That's actually how I trade personally. Remember, please, whatever you listen to in this channel is not is financial advice. I'm telling you my own aspect. I'm telling you the way I trade a particular market. So that is not maybe guaranteed that you must trade the way I'm trading. But I'm giving a guideline so you can follow my own guideline to actually place your own trades. Okay, that's it. Now let's continue. So now let's say you want to enter into a particular trade. After asking yourself, why do you want to enter this trade? Is it because I feel like taking a particular trade, or is it because I'm seeing something that's telling or that confirms that my strategy is actually at use? Because you might have a strategy first, that's true, because I know there are a lot of strategies online, but you've tried a lot of them, but it seems as if they are not working. They work for some time, then they don't work anymore. And some people come up with the idea that the market makers are against them. Believe me, no market maker is against you. The forex market is actually having a total turnover of almost $6 trillion per day. So tell me, who has such huge amount of money to control such a market? Because remember, if you follow this channel, I told you before a particular market could move in a particular direction, it must have a lot of capital, far more than that, which is pushing it down. Those that study physics, you know that they say that every object want to remain in its initial position or state of rest or state of motion, except it comes in contact with the higher force, higher than that, which is pushing it or which is making it to stay at a place. The same thing happens in the market. If let me say $500 million is making the market go bearish, if you want that same market to go bullish, then you must put in $5 billion to make sure that that market goes bullish. I repeat, let's say $5 billion is making markets go bearish and you want the market to go bullish, then you must have something more than that $5 billion. If you still put that same $5 billion for it to go bullish, believe me, you have what is called a doji. And that's what most time we say a doji, that's called what we call the indecisiveness in the market, because neither the buyers nor the sellers are winning. That means they are at equilibrium at that particular moment. So that means if the market is going down with $6 trillion, for you to make or for you to control that market, then you must have at least $7 trillion. But believe me, even the richest man in the world is currently on $200 to $250 billion, not up to $1 trillion. And and you're talking the markets are running in $6 trillion. So who wants to control that market? Nobody. So it's not maybe the market maker against you, neither your broker, nor the market makers, but the major problem you're having is yourself. If you can work on yourself, then you're in a step to becoming successful in the trading market. Okay, now let's go to, let's say for example, take a trade. I said earlier, you first thing you ask yourself is, okay, how much do you have in my account? A lot of people have small account and yet they want to take trades far bigger than what they have. Let me say, for example, you have a $50 account and you're taking a trade, you want to use, let's say, maybe 0.1 or maybe even 0.2 because you want to have a huge profit. Forgetting that the profit you're having, you also have the same tendency of having the same amount of loss. Okay, now let me say, for example, you have a loss of, let's say, $10. There may be a profit of, let's say, $20. Then how can you, let's say, for example, you only lost $10. Are you able to actually manage this $10 properly? That's what the problem is. Because, for example, now you place a trade and maybe you put your stop loss to, you can want to lose maybe just, let's say, maybe $50. You're risking $50 on that particular amount. Then your profit is, let's say, around $200 to $300. Can you actually wait for that $200 to $300? That's what the problem is. Most of us can wait for that $10. We can lose it. But then can you wait for that $200, for that $300? That's what the problem is. Because you feel like the $10 is small. But then the $200, once maybe you're already in $10, you're like, oh man, I want to take this particular profit. Why? Because you feel like it might reverse against you. That's because you've not worked on yourself properly. If you worked on yourself, once you set your trade, automatically before you enter into a trade, you should know your take profit level, you should know your stop loss level. So let's say you're setting a trade and you're maybe risking $5 to make maybe $50 or maybe $20. Just be relaxed, let the market run. I said in the last video I uploaded, if you haven't watched that video, please do wait to go and watch that video. Don't always be anxious. That's what kills most traders. It's not because they don't have the strategy. It's not because they don't have the mindset. It's not because they don't know what to do. Most times they know what to do, but the mindset or the psychology for it to relax, even when your trade is running in loss or in profit, that's where the major problem is. If you can remain calm while trading, believe me, that's why it seems as if most time when you go into demo trading, it's as if the market is a bit easier, you're always making profit. Then when you go real life, it's as if the entire thing changed and you're just losing upon losing. You're not losing because the market is wrong. You're not losing because the demo account is different from the real life account. That was the ideology I had when I started trading. A lot of people tell me that the demo account is different from the real account. Believe me, it's not different. The same market you see in the demo account is the same market you're seeing in the real life account. The only difference is you yourself. How can you manage that particular trade? When you're placing, let me say, a trade on a demo account, you can wait for that trade to get your take profit. Why? Because you feel like it's not my money. If I lose it, fine. If I win it, fine. If you have the same mindset on your real life account, you will make the same profit you're making in your demo account, even in your real life account. Take note, what I'm driving at is, before you enter a trade, minimum of your risk reward should be at least 1 to 2. That should be the minimum. Your risk reward should be what? Minimum of 1 to 2. My last trade, those that saw my trade, which I placed yesterday, it was almost, let me say, 1 to 5 risk reward ratio. But can you wait? That's where the problem is. The problem is not that you're not having the strategy. There are billions of strategy on it, and I'm sure most of you've used several strategy, but it seems as if you're not growing. It's not because you don't have the right strategy. You're the problem. Believe me, I'm telling you the fact, because this is what I've worked on, this is what I've used. You are the problem. If you can work on yourself, if you can work on the way you take your trade, if you can trade your real life account the same way you trade your demo account, you will have exactly the same results. So stop this mindset of always, when you want to go live, you're coming with a lot of anxiety, you're coming with a lot of emotions, you're coming with a lot of mind, and you're coming to make billions and trillions of dollars. That is wrong. That's where your problem is. So please stop that mindset. When you're coming to your real life account, first fund the account with money you're willing to lose. Don't fund the account with that much. If you lose, it's going to affect your real life trading. It's going to affect your standard of living. Don't fund your account with money you're willing to lose. After that, on a single trade, please and please don't risk more than 3% of your account on a single trade. When I mean risk, I mean your stop loss. If you place your stop loss, most time when you're using a system, it tells you on this account you're losing $10 or you're risking $10. Now ask yourself, that $10, how many percent of your account is that? If let's say you have an $100 account and you're risking $10 on just one single day, that means you can only trade 10 times. And believe me, even the most successful trader in this world, at times they have more than three negative trade at a roll. So that means if you lose three negative at a roll, that means you really lose at $30. So just imagine that. That's what the problem is. And once you lose $30, your emotion comes in place. Jesus, I've lost $30. You want to make it up. What do? You want to start revenge trading. And once you revenge trade, believe me, it never ends well. So please and please, first, once you have your account, you know your account size. Don't risk too much. Don't risk too much. Because let's say you have an $100 account and maybe place your trade, you're just getting $1. You'll be relaxed because you know even if you lose that $1, you can still have 99 chance of trading again. But if you're losing $10, you have just 9% chance of trading again, which is very rare for you to make up that $10 again. So that's what the problem is. And now let's say I've talked about the stop loss now. Your take profit, if you want to make, let me say at $50, please allow your trade to run. Just put yours in your mind. Before you set it, you already know, okay, if I'm losing this, I'm winning $50. If I'm winning, I'm winning $50. And if I'm losing $10. That is it. So don't touch the trade. Don't touch it. Put your stop loss, put your take profit, and that's after you've done your analysis. Please and please, your analysis is very important. You should have a strategy you're using. After the strategy, that tells you, okay, the market is gonna go in the bullish direction. You already know where your stop loss is. Put your stop loss, put your take profit, check your stop loss. How much am I risking on this trade? How many percent of my account is that? If you're okay with it, if you should lose that amount, focus on the losing side. Don't focus on the winning side. Because when you focus on the winning side, your mind will always be winning. So when you start losing, then you start having this anxiety of you want to close the trade. But when you focus on the losing side, you already know that your mind is already in the losing side. So you already know maximum you can lose. You can't lose more than this amount. So you already relax. Then let the trade run. If possible, if you're still having problem with that, please, after placing your trade, close the entire account. If possible, don't even use your phone for that moment. Let the trade run. Then you'll be surprised. That's the most time is as if after closing the trade, maybe you're already in profit, let me say like $10, and your major target is $50. After closing your trade, you notice your market actually still move down to where your take profit is. Now ask yourself, if you had left that trade, would the market have reversed? No, it have still moved to where your take profit was. You were the one that was just anxious. That's because we are scared of, okay, let the market not reverse against me. Now that I've seen maybe $2, now that I've seen $10, now I've seen $50. Let me take this profit instead of waiting for it to give me $200. Yes, it's important, but at the same time, that's not a trading psychology. Why? Because when you say you want to trade, you've already put your mind in it. This is the amount I want to win. This is the amount I'm willing to lose. Let it run. You've already done that. That's already in your strategy. That's already in your plan. You already know why you're entering the trade. You know when you close the trade. So then why are you not changing it? If you can let the market run, believe me, be profitable in the long run. Now, the second reason why most successful traders win is because they always record their trade. When I mean record, we have what is called a trade journal. I'm sure those that have been on this channel, I repeat, if you have not been on this channel, if this is your first time, please make sure you click the subscribe button so they can get notified whenever I post another video. Those that have been on this channel, I release my trade journal where I told you what I look at for before I enter a trade. And after that, why will I exit the trade? After exit the trade, check, let's say after a week, after 2 weeks, how many trades did you take? Then how many were in profit? How many trades did you lose? If you can do this over and over again, you notice at the end time you are actually winning. Believe me, don't only focus your trading idea on winning just in a single day. Focus on the long-term aspect of it. Focus on weekly, focus on monthly, and focus on yearly. Don't just have that mind of every day I want to make $100 every day, and any day don't make $100, you end up losing, if possible, your entire accountability. Why? Because you're always anxious to make $100. When you don't make it, you want to overtrade, and when you overtrade, you're putting your account at risk. Because then your emotion is at stake. You're not emotionally balanced. You just want to do things because you need that money, not because you're seeing what you should see before you enter a trade. Remember the first time I said don't risk more than 3%, if possible, say 2% of your account on a single trade. And the long run, on the total trade in which you're taking, don't risk more than 6% of your account in an open trade. I repeat, don't risk more than 6% of your account in an open trade. That's, for example, let's say you're placing the first trade, you're risking $10. Let's say you have an $100 account. The first trade you're risking maybe like, let's say maybe $5 for okay, let me just say $10. $10 is already 10%. So that means that's already too much. So if you want to risk it, you risk maximum of $3. If you have $100 account, your maximum risk on each trade should be $3. Or if you're using two loader, that means you can open what 3 trades at a time, which is 6%. I repeat, if you're having $100 account that and you're risking at least $2 on each trade, that means you can open 3 trades at a time. Don't open more than 3 trades, because once you open more than 3 trades, you're not risking more than you should. And that way, you'll not be able to have opportunity to trade over and over again. Remember, I told you the major purpose of trading is for the long-term purpose, not really for the instant purpose. If you focus on long-term purpose, then you can think of becoming successful. You don't become successful trading just overnight. It's something that takes time. So have that mindset. I repeat, don't risk more than 3% on an open trade. Once you know you have to open trade and you're risking more than 6%, let's say the first one you're risking $2, the second one you're risking $2, the third one you're risking $2, that's already 6%. Don't trade again until you've closed at least one single trade, or you've closed all the trade, they can trade again. Now, the second reason or the third reason why most people trade is that always and never in life. Okay, let me not use always, let me use never. Never as a trader should you have this mindset of going into public domain to check for signals. Because why I say, because a lot of people, they go into different strategies or different signal platforms to get signal from others. If someone should give you signal, is give you the signal based on his or her own perspective of trading. I repeat, if I should look at this market, maybe I'm a swing trader and I'm risking, I saw my stop loss, maybe my stop loss is like maybe $100 or $200, and I tell you, okay, buy this particular asset. I'm telling you to buy it based on where my stop loss is $100. Can you risk that $100 on your trade? That's where the problem is. If you can't risk that $100, that means we are not of the same level. Then why not focus on yourself? Focus on what you're willing to lose. Then do that. So actually, trading is not something that's difficult or something that you have to put in excess of energy. Trading is just you and yourself, just you and your charts. Follow these 3 trades or these 3 trades which I've told you earlier, and believe me, in the long run, you will be profitable. You can drop your comment in the comment section, and please, if you haven't subscribed, click on the subscribe bell on the subscribe icon, and don't forget the bell beside it, because that is what gets you notified when we post our next video. In summary, I said the first one, don't risk more than 2% of your trade on a single trade. The second one, don't risk more than 6% of your entire account or your trading capital on open trade. That means on the total open trade, you should not risk more than 6%. And when you have a trading at loss, please and please, if you should lose maybe like 3 or 4 trades at a row, don't trade, if possible, for that entire week. Let your mind come there. You should go to maybe a demo account and play the same trade and see if you can become profitable. Until you go back to your demo account and you're maybe profitable for like 4 or 5 trades at a row, they can go back to your real life account. Don't just maybe after losing 3 trades, just leave the market for like maybe 1 or 2, then come back again, want to start trading. No. Even when you leave the market to go to your demo account. Go to your demo account and be placing your trades just with the same strategy, with the same psychology. Don't feel like it's demo. Do everything you do in your real life account. That's the second one. And the third, I said, always record everything you do. Please and please, you should know when to enter the account, know when to exit the account, know when the account is in profit, what do you do? When the account is lost, what do you do? And the best thing to do is what? Just remain calm. Don't touch the trading. Once you place your stop loss, your take profit, and remember your take profit should be minimum of 1 to 2 weeks what they show. Meaning that if you're risking $10, your target should be at least minimum of $20, which is your take profits. That's what I mean by risk reward ratio. Then the next one, the final, I said, please avoid groups giving signals, because giving signal is based on their own psychology, not based on the general mindset of the people. So follow this pattern which I've given, follow these strategies, follow these steps, and believe me, in the long run, you will definitely be grateful you did. Once again, thank you so much, and don't forget, we have more and more interesting videos coming up. So do well to ensure you subscribe to the channel, click on the bell icon to make sure you get notified when we post our next video. Once again, thank you so much, and see you in our next video. So that's the end of today's live section. Bye for now. Thank you.